It's again, these are all the things that make me this longer term so bullish on Bitcoin. So again, if by the way, if you're an investor who really isn't going to touch your Bitcoin or really look at it for the next 20, 30 years, a move from here to let's start with gold actually. Let's
All
get
right,
into the gold chart and kind of just
let's
take
do
a
it.
look at what gold has done recently. So what I love about gold here is that it's behaving just like a breakout should, right? So we've talked about this, and I talked about back in December, January, February, how gold was consolidating. It was making this beautiful bullish consolidation pattern. Everyone said it was done. That's exactly as an investor what you want to hear. You want to hear people kind of writing something off, and then that's when you're looking to buy it, especially when you see this sideways action. This sideways action is very representative of accumulation. Right? When you have a big move up like it had and then all this sideways action, that's telling you smart money is accumulating. The breakout occurred right here. It jumped to a beautiful double top. You can see the double
Yeah.
top with the 2020 high, and now it's pulling back, which is exactly what breakouts do. They retrace to home base. Think of it like a kid going off to college. They always come back for Thanksgiving dinner to the parents' house. That's what gold is doing here, right? So look for it to come into a little bit more, and then the next leg up is going to take place. And I still have a forecast on gold with the potential of easily close to 2,500 by year end is definitely a possibility. When you look at everything going on, gold is in the sweet spot now. You have the inflation issue, which is not going away anytime soon. You have the Fed creating instability, potentially a recession. So that means earnings growth is going to stall out in a lot of companies. We're already seeing that with some of the drops in names like Netflix, and even Google just in the last day or so. So that is going to hamper the market. Then you also have the kind of the suction of money that the Fed is removing from the markets, from the economy due to interest rate hikes. That's going to keep pressure on Bitcoin and cryptocurrencies. And let's not forget that Bitcoin is trading lockstep with the NASDAQ 100. So if the NASDAQ 100, if the markets are going to go lower, Bitcoin will go lower. Gold is in that sweet spot. It's such an amazing opportunity here for gold. Look back at the 1970s. It's picture perfect, a replication. Two things. Number one, we have never seen instability in terms of the Fed trying to catch up in the last 10 years with interest rates and potentially forcing the market into a recession and unable to print money. And number two, we've never seen in the last 10, let alone 20 years, inflation at 8.5%, maybe even more than that. So this is a whole different ballgame. In fact, that goes into Bitcoin as well. Bitcoin has never experienced this period in its lifetime, and
That's
that's
right.
one of the reasons why it could be very hard for it to deal with.
Yeah.
Bitcoin is definitely, from the beginning of the year, Bitcoin is down. Bitcoin opened the year around 48,000. It's currently trading just below, well, right above 39,000. So it is down this year. And the biggest concern for me continues to be the bear flag that is forming. So if we look at a simple chart of Bitcoin and we look at the big move down from the November highs here, and then this is all inside bar. I mean, look at the amazing, these lines, by the way, they're 100% parallel between this one up here and the one below. And this Bitcoin chart is just working its magic in here, going sideways. And this pattern, again, if you look at 100 of these, 1,000 of these patterns, 80% approximately of these patterns will break lower. So again, there's no guarantees. It could always surprise us all. But considering the headwinds of the Fed hiking rates with inflation where it is
Yeah.
and everything else, you have to think the likely trajectory is to the downside over the next 3 to 6 months. 20,000 is kind of my high end. I do think it could go below that. If you look at this chart pattern here, it is picture perfect of Amazon in the 99, 2000 into 2001 dot-com bubble. If you look at how people talk about cryptocurrency or have talked about it, it's exactly how they were talking about the internet back in the late 90s
Yeah.
with the dot-coms. So again, you have the same replication of the pattern on the charts. You have the same replication of the thought process and the excitement. And in other words, you need a flush out. And in my opinion, this is not a flush out. We still have 19,000 now cryptocurrencies out there. That's way too many to even have a healthy market. You need to see a lot of those cryptocurrencies, and I'm talking like 90%, if not more, go out of business. And then the best of breed can rise again. But in that period of going out of business of a lot of the smaller ones, Bitcoin will have to take a hit. Just naturally, people will get very, very fearful. Bitcoin, definitely. I think Ethereum, Solana, Avalanche, maybe Binance, basically these best of breed top ones.
Yeah.
That's the ones I'm focusing on. By no means, don't quote me on those. I think if I had to choose one, Bitcoin's pretty
Yeah.
much a sure bet. The other ones, again, it's just not quite as sure because there's a use case for them. Now, as long as they keep updating their technology, they should be on the cutting edge. But my fear with those is always, is there a better one that comes into play and that takes over, right? But right now, Ethereum looks pretty standard. It looks like it's going to have a foothold. And the other ones have some very good sides to them as well. So again, go with the top 20 in general, not including the tethers of the world, since those are just tracking the dollar. Go to the Amazon chart. We're going to go to the weekly, and let's go back to the 99 2000 bubble on this, right?
Please.
So
Yeah.
here you have it. So this was your run up, and it looks very much similar. Look at this M pattern, which is
Yeah.
almost identical to what we have on Bitcoin. And what ended up happening here is you saw this wipeout where Amazon bottomed out down here around $5 to $6. So that's by the way, that's the worst case, right? So if you look at the percentage drop from 112 to $6, I mean, think about that mapped out to where Bitcoin could go from 69,000 to where, right? I mean, that's pretty scary. That's kind of a worst case scenario because I do think there's additional adoption taking place, so it probably won't go that low, but it just gives you an idea of what is possible. But then what I love to do here, folks, is remember this M pattern and let's zoom out on the chart and then look at where it is, right? So here's that M pattern right over here. And then look at what Amazon did over the next 20 plus years. So I
Wow.
think that this is a very,
Yeah.
very healthy thing. Think of it
Yeah.
in a Darwinian thing where you need the best to survive,
Yeah.
where you need the money and the focus going into the best ones. You don't want the focus spread amongst 19,000 cryptocurrencies. And then if you can get that, then the concentration of wealth goes towards the top ones, and you see this type of performance. So yes, 3, 6, 9 months out, I'm bearish on Bitcoin, but I ultimately am hugely, hugely bullish. There's lots of things that can be game changers, but in certain market environments, it has only a minimal impact at first. So yes, it does create a situation where if you're really excited about Bitcoin, but you just didn't want to open up a Coinbase account, you have the easy opportunity to do it. But let's be honest, if people are excited about crypto, they already have multiple ways to do it. You have ETNs, right? Like GBTC, you have the ETF that tracks the futures, you have spot price, you can go buy the futures. So there's so many ways where I think that if the fear is pervasive and there's a washout occurring, you'll get a quick bounce and then it'll just go right back down. Now, longer term, when you get stability, when you get the right type of regulation out there that protects investors from getting their Bitcoin stolen out of their wallets, that is when having an ETF becomes hugely important, because you'll see more and more institutions loading up, beginning to accumulate,
Right.
pension funds, all those things will start to come in.
News out this week, Fidelity offering 401k investors access to Bitcoin. It's the first retirement plan provider to do so. Was that big news for you?
Yeah, it's again, these are all the things that make me this longer term so bullish on Bitcoin. So again, by the way, if you're an investor who really isn't going to touch your Bitcoin or really look at it for the next 20, 30 years, a move from here to 20,000 is not even that big of a deal considering where I do think it is going to go. Plus it enables you to dollar cost average on the way down. But I do think all of these are pieces of the puzzle that are slowly going to the mass adoption of Bitcoin. So even El Salvador, we know about that. We know about all these other things that are going on. These are all these pieces of the puzzle that are beginning to make for the big long-term story of Bitcoin as the digital gold.